Good afternoon, everyone, and welcome back to another episode of FECG TV, where we focus on different topics in education and otherwise that affect African American communities. I'm your host, Sean Fisher, proud CEO and owner of the Fisher Educational Group. And today we have a wonderful, awesome guest that you are really going to enjoy, Miss Ericka Friesen. Today she'll be here to talk to us about financial literacy in the Black community, and specifically educating our Black youth on financial literacy. Miss Friesen, welcome to the show.
Well,
Oh,
thank you, Sean. I appreciate that. Well, yeah, when you knew me, I was Erica Price, and now I'm the artist formerly known as Erica Price, and I am now Erica Abrams.
let me correct that. So, everyone, the Black family is so important, and I made a mistake. We go back over 30 years, and I knew her when she was Friesen, but thank you for correcting me. And no disrespect to your husband, great guy. She is now Mrs. Erica Abrams. So thank you, Erica.
Yeah, thank you, Sean. That's okay. You can. That was a mistake. That was 30 years in the making. It's all right. Thank you for
So
having me on your show. I appreciate the opportunity.
thank you. So, Mrs. Abrams, just tell us a little bit about your background and what brings you here
Okay.
today.
Sure, sure. So, as we just mentioned, we've known each other for over 30 years, and we're both from Cleveland, Ohio. I'm from the east side of Cleveland. Sean is from the west side. There was always a rivalry there,
A little bit of
but
rivalry.
anyhow, yeah, yeah. I grew up in the inner city of Cleveland. I had two loving parents and two younger brothers, and I was very fortunate to have a two-parent household in that era, growing up in the 70s and 80s and 90s. And we all can understand what are some of the challenges and some of the bright spots of our communities during those decades. And growing up in inner city, I went to public school, Cleveland Public Schools. I was always a high achiever, and I enjoyed learning, and I enjoyed what I knew the world had a lot of wonderful things waiting for me. At least that's what I was prayerful about. And I was student government and different activities, extracurricular activities in school. And I decided to pursue my collegiate education at an HBCU. So my parents and family supported me immensely, both financially and emotionally, and that was not easy, because it was, as most folks know, it's a challenge for funding for HBCUs as far as funding the education. So, but I was blessed to have that family support. So I went to Clark Atlanta University. I graduated from there, spent about 7 years in Atlanta, and then came back home to Cleveland, Ohio, where I pursued my master's degree while I was working for Case Western Reserve University. And I got my master's in public health. So I got my bachelor's in community health education at Clark Atlanta University. I was on the fence about being a medical doctor or going into some form of medicine. But when you don't have the proper information, you don't make the right decisions, right? Or you may think that you end up making the right decision. So I really didn't have any mentors to say, hey, well, if you do go to medical school, it's not going to be what you think it's going to be. Because I'm thinking, man, I'm gonna have to spend all this time in school, and it's going to take me forever to get my first paycheck, and different myths and bad information that you might get from your community, because they don't have that learned experience, right? So you don't have any mentors. But I did have good mentors throughout my matriculation from elementary school on up. But as a result of not really having that mentorship as it relates to advanced education, I opted to go in public health and stay the academic route and not go to medical school. So I got my master's in public health. I worked on um, uh, clinical research projects that were funded by the National Institutes of Health for several years at Case Western Reserve. And then I also started pursuing my doctorate in public health as well. I took a sabbatical after having my second child. And so my husband and I, we actually have three children now. And we started our lives together in Cleveland, Ohio, and then we most recently relocated to Houston, Texas. Um, I've had a couple of businesses. Started a nonprofit, Restore the Village. Sean and I were just talking about me resurrecting that and tweaking the mission a little bit, and I'll kind of expound upon that. I've also had I've opened a successful senior care business, Honor and Compassion Home Care, where I utilize my public health expertise as well as my expertise working in long-term care to serve seniors in the Cleveland area, greater Cleveland area. So I had home health aides and nurses basically go and provide direct care, non-medical care to seniors in the medically fragile in the community. I have procured county contracts. I've pursued, I've done grant reviews for the federal government. I've had a vast experience in various areas, which is a blessing. And then also I was appointed to the school board in the city of Cleveland under the city of Cleveland's school district is under mayoral control, and it's been that way for over a decade. Essentially, the city of Cleveland is unique in that because the school board was perceived as dysfunctional, um, the mayor of the city of Cleveland, Frank G. Jackson, decided to petition the state legislature in Ohio to allow the city of Cleveland mayor's office to essentially appoint the board members and hire the CEO, or what some may consider the superintendent of the school district. So it's been that way for some time. So I was interviewed by the mayor of the city of Cleveland after putting in an application, and I was hired in 2014, 2015. So I served the Cleveland Metropolitan School District as a board member appointed by the mayor during that time span. And it was very rewarding. I was able to, during my tenure, I was able to bring forth a board resolution that focused on training and awareness regarding human trafficking risk and risk reduction among the student body population, because Cleveland is a, I won't say a hotbed for human trafficking, but there are some risk factors in that city as it relates to human trafficking. And Toledo, Ohio, which is not far from Cleveland, is a major um, transit hub for human trafficking to moving individuals in and out of the state and over to Canada. And so, from that, in order to protect our young people, I felt that it was paramount that not only the teachers knew about some of the risk factors or symptomatology of human trafficking, but also all the way down to our custodial staff, our administrative staff. Everyone needed to be made aware to help best protect our children from the risks of the scourge of human trafficking. So now, fast forward to today, my family has relocated to Houston, Texas. We've been here just under a year, and I have a insurance agency. I'm licensed in several states, and so I help families build generational wealth with life insurance, help with retirement planning, with annuities and Medicare for seniors. And then I also have agents that partner with me as independent contractors to help serve their community in the same way and make either a career choice or supplemental income. And then most recently, because health and wealth are inextricably linked, even though started my career in health and public health and academic clinical research, I transitioned into wealth. And so because they are linked, I feel that it's a very appropriate segue into another part of my career. So outside of the insurance um, options that I have for my clients, I now am a mortgage loan originator. Some people call us loan officers, loan consultants, loan advisors. And so what I do is I help families and business owners procure funding for either residential property, commercial, multifamily, international vacation homes is another area I'm looking at, helping support my clients in obtaining funding for that. And then helping to educate the community about home ownership, credit worthiness, and there's obviously a financial literacy component in that. And so it's essential for us to, as Black Americans, African Americans, to understand the importance of home ownership and credit worthiness and how it's attached to that, and how home ownership. Uh, and I think this is a really great evolution for my career because um, at the end of the day, as volatile as our economy is, you know, all of the international interests that are playing into what's happening in our economy with, you know, as you know, Sean, you were a service member. Thank you for your service. You understand, you got a chance to see firsthand the international politics and, you know, how that can interplay into how the United States economy may react based upon the different things that are happening in our international community, whether it's a friend or foe to the United States. And so, with that said, um, there's such a macro there's such a macro environment as it relates to financial literacy, and then there's the micro environment as it relates to teaching about and helping our young people understand about financial literacy. So there's so many layers to it. It's not just about how do you balance a checkbook. Our children have to start making decisions about their career choice and how it's going to relate to their financial stability and their earning potential, and all of that ties into financial literacy.
Wonderful. Thank you, Erica, for the very thorough and awesome introduction. As you were talking, I was just taking a few notes and a few things that I want to lift up for our listeners. So, a couple things. You were a board member, board of education member, which
Mm-hmm.
everyone I want to highlight because that's very important. She's not speaking from a theoretical perspective. She's actually done this work and she's participated in the education of thousands of students. Uh, for those of you that don't understand, board members really control and approve quite a bit of the operations within a school district. So they have the opportunity and ability to definitely leave their imprint and impact on our students. And specifically in a district like Cleveland, which is overwhelmingly Black scholars. So she had a direct impact. So I want to highlight that as well. First and foremost, I want to highlight that Erica is a parent of school age children. So this is this is in the forefront of her brain, right? Foremost, I can tell you that one of the most important things to her is her children, are her children rather. Last thing, generational wealth. I want to highlight that one. Very important to the African American community. Our children are disproportionately growing up in poverty. I was just telling Erica off air. Recently, I read an article that said the average Black family is financially 228 years behind the average white family, while the average Latino family is only 84 years behind. So, very important. We are over 200 years behind on average to our white counterparts. So, very important. So, I want to bring this all together and bring it around to our next question, which is we're going to focus on your youth financial literacy program.
Mm-hmm.
So, would you mind, Erica, taking a few moments? Not a few moments, actually, I want you to speak extensively about your youth
Mm-hmm.
literacy program.
Yes, absolutely. So, YFL is for short, the Youth Financial Literacy Program. It is a curriculum that was designed by United Credit Education Systems. And essentially, what they do is they have a credit restoration platform for the consumer. And what they have partnered with them in order to help support and clients to understand how to best manage and restore their personal credit. And they have with their nonprofit, they have the Youth Financial Literacy Program. So what we're able to do with that is offer a no cost curriculum in the schools or in a community organization, but it's predominantly targeted for the schools, where we'll come in and we will do, it's typically fifth to ninth grade. That's the target, and we'll come in and we'll administer the curriculum in concert with their educational leaders in the school, and offer this at no cost, and then also offer scholarship opportunities throughout the year. So every year there is a scholarship opportunity for anyone who learns about it. So it's open to any and everyone, and it's a $5,000 to $6,000 scholarship that can be renewable for their pursuit of higher education. So it's a great organization, great curriculum, and it essentially helps young people understand the importance of um, maintaining their personal credit, how credit scores are designed, what are some things that you can do to make sure that you remain credit worthy, reduce or eliminate debt, not put yourself in situations where you can be in over your head. I saw some data that suggests that more and more people that are in the 30-year age bracket, 30-year-olds, I don't know, what is that? Not millennials, those are what, I don't know what you call them now, but
Yeah, I don't know now. You're right.
there's so many, but they're filing bankruptcy at an alarming rate. And a lot of them are not understanding how their personal credit could potentially where they may not necessarily have to file for bankruptcy. There may be some other alternatives that they can utilize. So with that said, so that is a complimentary program that's available, and it's taught by individuals such as myself who have decided to partner with United Credit Education Systems and with their credit restoration program for the consumer. So this curriculum is something that a lot of individuals that have partnered with them offer in their communities or church or faith-based organizations or community centers. So it's a phenomenal program. The students get a certificate at the end of it. And then there's also a celebration that the nonprofit also funds. So YFL will provide a celebratory event. Usually it's a pizza party, something like that, that the children enjoy. And we will spend up to $500 on that special celebratory event for all of the participants that successfully complete the curriculum, complete the program. So it's really, really nice. So anyone who might be interested in that, obviously in the Houston market, but I could connect them with some colleagues of mine that may be in their local area that are also working with, partnering with the organization.
Thank you. That was going to be my follow-on question.
Sure, absolutely. I can refer them to another professional that will be able to help them.
Not
Hmm.
even though there's a time difference, I'm thinking about
Hmm.
some of my colleagues. I wonder would it be possible, because I know you personally, I know your commitment and your competency.
Hmm.
Would you be able to deliver this remotely?
Absolutely, I sure can. I sure
Okay.
can. It takes the remote. Well, that's a very efficient way to do it. Absolutely, yeah, yeah. It's a very
Okay.
efficient way to do it. I'm old school. I like doing stuff in person with the children, but this is also a very efficient and effective way to deliver the material. So yeah, that's something that's an option as well.
Okay, definitely. As I'm thinking, our kids are there now after 2 years of remote learning. I think they probably could handle it. Maybe our high school students, definitely.
Yeah, yeah, definitely.
Yeah, definitely. So we'll follow up with that.
Okay.
So I'm thinking, you talked about your program, but
Hmm.
I want to know about the genesis of it, or rather the
Hmm.
why. So what are you seeing in the Black community in regards to financial literacy?
Well, you know what, Sean, you gave some very alarming and true statistics about um, we're behind the eight ball. I mean, we are still dealing with the fact that we haven't received our 40 acres and a mule that was promised to us, right?
Right.
So we were not, most of us, some of us were here. I mean, that's another thing. Knowing your history, we were not all brought here as enslaved. Enslaved Africans. Some of us are indigenous people to the United States of America, right? So a lot of us don't know that and understand that. But those of us who were brought here forcibly, forced immigration, we were promised our 40 acres and a mule, and we have yet to receive that. So from that, we are behind the eight ball. We had 400 plus years of forced unpaid labor, voluntary labor, and we were never compensated for that. Some people think that that's something we need to just gloss over. Some of us have pushed for legislation at the congressional level to make sure that we're awarded that. Whether or not it's going to happen in our lifetime, we don't know. But what we do know is that right now we can take control of our own financial situation, and from that, um, the natural transition for me to go from insurance, which is a wealth builder, to home ownership as the predominant wealth builder for anyone is, is a fantastic way for me to kind of help to bridge that gap for my community. Number one, there's not a lot of African American women mortgage loan originators. I learned that as I started doing research about the industry. It's a predominantly male uh, career, white and black males. There's more males in it, black males in it than black females. So having that level of diversity from a gender standpoint is important, and more people are getting into it. And there's so much financial literacy that I am becoming aware of as it relates to financing properties. And I'm able to pass that information on to my clients and business owners. And so from that, home ownership is key. There was a huge transference of wealth in 2008 during the whole meltdown, right? You had a lot of people whose homes were foreclosed. So a lot of African Americans lost the opportunity to maintain or sustain or build generational wealth 15 years ago, 14 years ago, when we had the Great Recession. Because what happened was the banks took those homes back, and wealthy investors, hedge fund investors, those folks bought those, gobbled up those homes, and now they turned around and they're renting them out to the same families who lost them. I mean, theoretically speaking, but essentially, that has
No,
also set us back.
practically too.
Right. That has set us back. 2008 has set us back. And if you notice, every decade or so, there's another crisis. Okay. So pay very close attention. When it comes to the economy, I'm learning nothing is by just random. It's nothing's random. Okay. Think, okay. So 2008 was what, 12, what was that? 12 years ago, 13 years ago, right? What did we just have in 2020?
Right. Pandemic. Right.
Okay.
Yeah.
That was 10 years from that. So right. So when you look back from 2008, it was something before that. It was the whole um tech, the Silicon Valley crash,
Tech bubble. Right.
if I recall correctly, right? So
Correct.
you every decade or so, there's a new reset. There's a financial reset, and we have to open our eyes and understand that finance, the economy, these changes are cyclical. They follow a cycle. That's why interest rates are rising now. You cannot, it's not sustainable. Okay. Interest rates are rising. Labor costs have increased. Lumber costs have increased. Okay. So there's so many layers to the economy and how it works. I am by no means an expert, but I'm learning more and more every day. And what our young people have to understand is that this is a global economy. What happens on Main Street oftentimes is controlled by what's happening politically internationally, and then it hits the US markets, the NASDAQ, the stock exchange, the US stock exchange, and so on and so forth. So it's so many layers to it, but fundamentally, what I would like to impart amongst my young people is that you have to understand that this is a global market. And a lot of the young people are getting it. They're understanding about these cryptocurrencies and Bitcoin, whether or not you buy into that or not, no pun intended, it's there, right? So there are these new modalities of transacting that is beyond the natural paper dollar. And so from that, with these digital currencies and everything going digital, and with the so-called pandemic and the different restrictions they were putting on us using coins and paper money and switching us over to digitized currency, and you touch, the touch and the debit cards and all of that. There's so many layers to that. So the writing is on the wall as to where our young people need to be thinking about career choices, because that ties into finance. Gone are the ages of you going and getting a 4-year communications degree. Gone are the ages of your child going and getting a degree in liberal arts and wasting $20,000 a year, or whatever the price of tuition is. I can't even fathom it right now because my 4-year degree at Clark Atlanta was $56,000. Now it's probably $30,000 a year. I haven't even kept up. But my point is, we have to think globally. We have to think with the mindset of, not, you can't think about what's going on just in front of you. You have to look at the entire world. And social media is also opening up our children to a more worldly perspective, I think. If they start to digest it in that way and not just look at it as a form of entertainment. And so getting back to the career choices, that is going to be paramount to where your finances are going to end up. Because I encourage children, when I have these discussions about finance and thinking about a career choice, you have to pick something that cannot be outsourced by artificial intelligence, something that's not going to be outsourced with automation or robotics, So there's so many layers to this, because you won't have a financial foot to stand on if you don't have a career or a business. And when I say career, I mean business ownership as well. If you don't have a career or a business that's built to be sustainable in this new world that we're living in, and we don't have a crystal ball, but we cannot ignore the trends that we see and the different, pay attention to the steps that are being taken from a political standpoint. Pay attention to these major corporations. What are they doing? When we moved to Houston the end of 2020, was it the end of 2020? Yeah, I think so. The end of 2020, Amazon and Tesla was right behind us. They left California. Okay, so they bailed out of the state of California. I mean, some people may postulate, I think, that they were not interested in continuing to deal with the high price of doing business in California, the high housing costs, and the high taxation, and the draconian measures that were being put down on them to conduct their business under the mandates of the pandemic per the governor's orders. So these are reasons. Watch how business is moving. So they flooded Houston, and several other corporations flooded the state of Texas, and they're flooding Florida. People are bailing out of dying cities, or regions, whether it's dying, and it's all about economics. So think about, and of course, people are going to still reside in these regions, and if they do, we want to get our young people thinking about, what are they going to need now that people can't qualify for homes because the prices are too high, the lending is getting tighter, the interest rates are going up. What does that mean? People have to have somewhere to live. So where are they going to live? You need to think about becoming a landlord. So paying attention to all of these different things. And so with that, I was just having a conversation with some women, some professional women. A good friend of mine did a women's intensive event yesterday, coaching women on looking at different industries outside. They wanted to be business owners, or they were aspiring business owners. Look at industries that are where women are underserved. They don't have enough business owners in those key areas, and getting our children to think about that. There was aerospace, it was food canning and preserving, it was cement manufacturing, and all these different things. And these were all professions or skill sets that the United States government had earmarked special support and funding to nurture women business owners in these areas because they want to award them contracts. They want to award them set asides. So if our children are thinking about entrepreneurship, because a lot of them are, they're on social media, they see the glamour and the glitz of being a business owner, but they don't understand there's work involved. It's anything worth working for is worth having, though. But
Erica,
yeah,
I
go
want to
ahead.
pause you just really quickly. I'm gonna push you in there.
Sure.
So a key point you made, I want to send this message out to our black girls and women watching. So I just read an article that said the average black woman with a master's degree, specifically they were saying attorneys and also in medicine or with an MBA can expect to earn 800 to $900,000 less than their white female counterpart with the same amount of education. So one of the ways to offset that loss from working for someone else is to own your own businesses. So definitely, our black females, just something interesting I read as well. Black women are the only women that, as their education goes up, their pay gap increases. So a black woman will never be closer in earning to a white female than when she's in high school. As she gets more degrees, the gap gets wider, which is insane. But in the same
That's
article,
true.
yeah, but in the same article, they said that black women are more likely to obtain postgraduate degrees. So, and they demonstrate more ambition to lead and be owners. So it's interesting that the harder they work, the less they make in comparison to their counterparts. So
That's right.
everyone paying attention to this channel, please listen to what Erica's saying. She's giving you good advice on how to circumvent some of these, I call them built-in traps. you know.
Yeah,
Yeah.
institutionalized racism, basically. you
Yeah, yeah,
know,
yeah, yeah,
yeah, we
yeah,
have to
definitely.
overcome that. We cannot sit on the sidelines. And thank you for that data, Sean. We can't sit on the sidelines or bang our head against the wall. We just have to come up with solutions, flat out. Because either you're gonna like you're gonna either I'm not gonna use that terminology, but you're just gonna have to figure it out. You're gonna have to figure it out, and it's pretty simple. um, they're going to put these traps in place. They've been there for 400 plus years. Been behind the eight ball. We have made some achievements, but at the same time, when you think about it, the over incarceration of our men and now our women, that's playing into our wealth building potential because you mentioned about Black women being behind their white counterparts. Well, um, we're getting all this education, which means we're also mounting up a lot of debt. And one of the big issues around home ownership until recently, the FHA just changed their guidelines to where now they're only going to look at 1% of your monthly, of what your monthly payment will be on your student loans. All aggregated together. What would that monthly payment be? And they're only looking at 1% of that now, right? As opposed to 1% of the total. So that's helpful now because now people who were boxed out of home ownership because of their student loan debt now have an opportunity to become homeowners, which again is the pillar of building generational wealth that you can transfer on to your children or your heirs upon your death, and that you can leverage throughout your lifetime, pulling equity out. People have so much equity right now. I was watching and I'm not going to get off topic, but I was watching the HGTV yesterday. In 2017, there was a young Black couple in Houston that was buying a house, and it was $127,000. That same house in Houston today is selling for $289,000. 208. So they bought it at 127. Let's just say
Wow.
130. 130. Today, that same type of 4-bedroom home in Houston, in the suburb of Houston, is 289. And that's an
Wow.
existing home, right? So they have over $160,000 in equity, right? They
Powerful,
can take
powerful.
that 160,000, they can refinance their home, take that one, they get 80% of the 160, okay? Take that money and they can put down 10 to 20% on two rental properties and still have money sitting in the bank. They could turn
Mm,
around and put some of that money into an annuity. An annuity doubles in 8 to 10 years. And they could start drawing from it at 59 and a half to supplement their retirement. Like there's so many creative ways that you can leverage real estate. They can use it to pay off their child's student loan debt. So now their child comes out of college with no debt. Then they could turn around and buy a house under FHA with only 3.5% down. And they have a low debt to income ratio because mom and dad leverage their equity in their home. And this is what our white majority population in the United States is able to do with home ownership. And we've been locked out of that from redlining. Redlining is a term that means that the banks are only going to lend in certain communities, and they're going to box you out of other communities that may be more affluent, that will give you higher equity return on your home. Okay, then you have the banks, the realtors that were steering you to other communities with a lower return on your equity. So it's we've that's all institutionalized racism, and for years, and now it's finally coming out. The appraisers have been discriminating against Black homeowners. That's been in the media lately. The appraisals, your house might actually be valued at 300,000, but the appraiser that doesn't look like you comes, because there's very few Blacks in the appraisal field. That's another field in real estate that will be great for people that look like us to get into, because you're valuing the home. So the bank, when they get the appraisal, your house is really worth 300,000. They say it's worth 260. You've lost $40,000 in equity. That $40,000 could pay down your 20,000. You could take that and pay off $20,000 worth of credit card debt that's costing you 23% interest. Now it's paid off, and the interest you're paying is only tied to your mortgage, which might be a 4% interest rate. So these are ways that institutionalized racism from a real estate standpoint has boxed us out, and it's still happening today. Not so much the redlining, but the appraisal devaluation is a big issue that has been coming to the forefront of the media. But to circle back around to Black women and salaries, they're going to continue to discriminate against us as it relates to that. So business ownership, having a I hate to say side hustle, because that just, the connotation of that means you're grinding and you're not really getting anywhere, right? Hustle is just, it's arduous. We don't want that. We don't want to use that nomenclature. We don't want to use that. We want to say a supplemental income. You need to think about supplemental income, because you cannot rely on one income, whether it's, baking cookies or, not to devalue that, but that could be something you could turn into a legitimate supplemental income. Real estate is fantastic. It's an appreciating asset. A lot of people are concerned, should I buy now? The interest rates are climbing. The property values are through the roof. I'm no expert, but I will say this. If one thing is going to stand and always stand to be an appreciating asset, it's real estate. My grandfather, I'm going to make this point. My grandfather, rest his soul, he told me in the 80s, he had 15% interest on an 8-unit apartment building. When my husband and we bought our first home, interest rates were 7%. That was back in 2004. So, real estate is always going to be transacted. It does not matter what the interest rates are. It doesn't matter what the property values are at that time. That's just the fluctuation of the market. What we may see, we don't have a crystal ball, but what the experts are postulating is that as interest rates are climbing, property values are going to decrease by approximately 15% by the end of this calendar year. So what does that mean for people that's looking to buy? That means that they might want to go ahead and still move forward if they can buy, if they're in a position to buy. And then also people that want to refinance, do it now, because your home is going to decrease potentially by 15%. So that's 15% equity that you're not going to be able to access, because when the appraisal comes in, it's going to be 15% less because the market is stabilizing it, But yeah, so and as it relates to Black women and Black families, all of this is relative, because I mentioned the over incarceration of our men. If we don't have viable mates, then we don't have the foundation to build a family, which also means we don't have an additional breadwinner in that household. which means that we're again as Black women behind the eight ball because we're struggling to maintain a household on our own with one income that's already has been impacted by institutionalized racism and discrimination
Appreciated,
as it relates
devalued.
to salary. Exactly. So, and then that also, with my public health hat on, that also leads to stress, hypertension, obesity, diabetes, the comorbidities that make you more at risk for premature mortality, right? So then we leave our families too early. And this is not just exclusive to the Black woman. Obviously, the Black man has a tough time too as it relates to maintaining health, right? So we're leaving our families way too soon. And a lot of times, going to back to the life insurance, we don't have proper life insurance. We don't have estate planning in place. But we're spending $300 a month on cell phone bills, right? $150 a month on cable bills. If you put $150 into a life insurance program for everybody under your roof, you could have hundreds of thousands of dollars of life insurance in the event that somebody passes away. Now, you talking about building generational wealth, life insurance and real estate. Even wealthy people have life insurance. People think, oh, no. Wealthy people have life insurance because they know at the end of the day that there's no asset on earth that you could pay $20 a month and somebody die and you get $100,000. You pay $20,000 a month. I mean, $20 a month.
Mm.
You pay $20 a month for 6 months, and your grandmother passed away after you made 6 payments, and you getting $100,000. There's
Wow,
nothing
wow.
out there like that, right? You've invested how much? You've paid $120 in premiums to the insurance company, and you're going to get a check for $100,000 because your granny passed away.
Mm.
Unfortunately, but that's how you leave legacy. And Black folks, I'm gonna keep it real because this is for us, right? I'm gonna keep it real. Stop buying life insurance on your deathbed. Stop depending on your employer based life insurance to sustain your family if you die. When you die, because we all checking out, right? We just
We
don't
are.
know
We are.
when. And by the grace of God, it's going to be when we've done everything we wanted to do on this earth, right?
Definitely.
Stop. Stop it. That's one thing that I really want my people to understand. And it's a lot of misinformation about life insurance. People think, oh, well, if I get the first 2 years, if I die, my family gets nothing. That's not true. What they're talking about, and I'm gonna just give a quick little synopsis about insurance, if you don't mind. But what they're talking about is a 2-year contestability period. Every life insurance policy has a 2-year contestability period. I don't care if you buy it off a TV with Colonial Penn. That's even worse. I'm gonna tell you about that one. Or I don't care if you buy from your agent with State Farm or Allstate, or you buy from me. Every life insurance policy is designed to have a 2-year contestability period. What that means is, in those 2 years, there are clauses. You can't commit suicide in the first 2 years. Your family only gets, and if you die within that contestability period, your family gets the premiums you've paid plus anywhere from 4 to 10% interest. Okay. So it's not that you get nothing, you just don't get the death benefit in that instance. So no suicide during the first 2 years. If in fact you die within the 2 years of the policy, the first 2 years of the policy, the insurance company is going to scrutinize why you died, because they are a corporation that's interested in getting a return on their investment. So if they can find something in your application that was disingenuous, legitimately disingenuous, not that you said you was 200 pounds and you really 300 pounds, not something like that, right? They're looking for, if you say you didn't have a history of cancer but you died from lung cancer from smoking. Like if you said, I didn't have a history of cancer, maybe you didn't. Maybe you just got cancer and then you passed away, right? That happens. But if you say, I don't smoke cigarettes, but you smoke a pack a day, and then 8 months after your policy is in force, you die from lung cancer from cigarette smoking, they're not going to pay that claim. So that's where the 2 year contestability period comes in. Your family's going to get what you've invested in the policy thus far and interest. And that'll be, depending on the company, that'll be anywhere between 4 to 10% interest. So buy life insurance. If there's nothing else that you hear, buy life insurance on everybody that if anybody passed away, if you got to stand in that funeral home and make arrangements, you need to have a life insurance policy on those people. Your children, your grandchildren, your parents, check their policies. Your great grandmas, they always talking about oh yeah, baby, I got life insurance. And then you go in that old shoebox and she's taking out 3 or 4 loans on that policy to get your uncle out of jail. Okay. 15 years ago, Big Mama took some money off of her policy, her whole life policy, to handle some affairs, pay her back taxes and things like that. And our families don't find out these things until they're standing in the funeral home.
Thank you, Ericka. So I'm just looking, you've answered all my remaining questions. This has been super powerful information. What I'm wondering is, if people want to reach out and connect and get more information, I know over your left shoulder we have your information there, but do you want to verbally just articulate where they can go to get more information or how they can get in contact with you?
Absolutely. So I can be found on all social media platforms for the most part. It's my full name, Ericka L. Abrams, on Facebook, Instagram. I'm on Twitter. I don't do too much on there, but I am on Twitter. And then also I just started a page on Fanbase, which is Black owned. And I had not too much going on there. I'm also on LinkedIn, and I have a YouTube channel that I'm about to bolster to provide a lot of good information to the community, because there's no one out there really talking about life insurance in that regard, as far as generational wealth building. And of course, I'm going to talk about home ownership and credit worthiness, and how you can invest in real estate in any market. You can find a way, even in tight markets, and maybe where you live, there's not a lot of inventory. There's other creative ways that you can invest or leverage your current property to build wealth. So you can find me there, and my name is spelled with a C and a K, Ericka. And then also, I have a few websites, legacy42insurance.com. You can reach me there via email. And then, of course, you can, that phone number there, 832-745-2047. That is a direct line to me. It's one of my cell phones, my business phone. So yes, and you can Google me. Google me. You'll find some information about the things that I've done with the school board. I've been in various newspapers, NPR, on public radio, American Public Radio. I've been in the Akron Beacon Journal, the Cleveland Plain Dealer, and so you can just Google me. You can find me there.
And yet you still manage to answer when little old me calls. So
of course, listen. I am real. I'm from the hood, the inner city of Cleveland. I just know that our people are an exceptional people. Dr. Claude Anderson has said that. Thank God for him. We are an exceptional people. We're the only people that have been through what we've been through in this world, in this time span, and we're still here. We stand on very tall shoulders, and we owe it to ourselves and our ancestors to do the best we can with the abilities that God has given us to do good and do well. And so with that, I am really thinking about, with Restore the Village, which is my nonprofit, to really resurrect that. I had said it on the side for a while, but resurrect it and start bringing families together for communal events. Some people are not tied to a church. Some people are not tied to pan-Hellenic organizations or fraternal organizations, but they need a vessel. They need an outlet for the children to connect and for parents to connect. And I appreciate what you all are doing in your area, in your county, Sean, with the African American Family Network. So these are grassroots things that we can do, and it doesn't have to be a big grandiose thing, but it may grow into that because
Mm,
we have to come together, and in coming together, I'll end on this as it relates to real estate. Think about all of the money. A lot of times our young people are like, oh, I want to move out at 18 and this and that. Well, we may want them to move out at 18,
mm,
but think about how fantastic it could be for several years. Everyone pool their resources, get a nice big home together, and then people gradually step off. So instead of fueling a landlord's pockets for several years, paying $1,200 a month rent. Imagine if you pool your resources together and with people that you feel that comfortable that you could live with and get along with, and build equity for the family in one communal home. Here in Texas, that's something that, and in areas with big homes, even up in the Midwest, 6 and 7 bedroom homes, some of these older homes in the inner city that are dilapidated, that you can bring back to life, and really help your family have a jumping point. So when the son who does stay decides to marry, or start his home business, he can step off, and there's equity within the home that could be leveraged, a home equity line of credit where you can just pull equity out as you need it. You can help him start his business, help him put a down payment on his first home with his new wife, and these are things that we need to consider. And that's that we've gotten into the individualism, the European mindset, the Eurocentric mindset. When naturally we're a communal people. We
mm.
keep the elders in the home with us. We take care of them until they breathe their last breath. That's not exclusive to the Asians. That's not exclusive to the Indians. That's not exclusive, well, to the people that identify as Indian. I mean, Indians from South Asia. That's not specific to the Mexican or Latino population. That's most melanated people kind of operate in the same vein as it relates to how they deal with their family, how they deal with the elders in particular. So yeah, so there's, as it relates to financial literacy, there's so many cultural nuances that's involved with that, and I just challenge our community to think broader, um, and get and really help their children plan for the future, and seek out individuals such as myself, where if you just want to talk about different things that you can do to help your young people, your children, I'm always open to have individual conversations that don't involve a major presentation. And I know I'm still learning. I'm still learning too.
It's all good, Sister Erica. It's all good, especially whenever I get to talk to you. So, hey, I'm going to draw it to a close right here by thanking you for this powerful message on financial literacy, education, and also wealth building, and the power that we have in ownership, whether it's a business or whether it's property. So, thank you, Sister Erica. I appreciate it.
Thank you,
And
Brother Sean. I appreciate you for the opportunity.
absolutely, yes, ma'am. So, everyone, thank you. This has been another episode of the Fisher Educational Consulting Group television channel. My special guest today was Sister Ericka Abrams, longtime friend. And I'm your host, Sean Fisher, proud CEO and owner of the Fisher Educational Consulting Group, saying thank you for joining us, and we hope to see you next Sunday.